Welcome back to Talk Tickers. Today, we're going to be diving deep into Delic Logistics Partners' fourth quarter 2024 earnings call.
Yeah, this one was pretty jam-packed with interesting information.
Yeah, it was. Delic had a record-breaking quarter. They hit about $107 million in adjusted EBITDA.
Yeah. For anyone new to earnings calls, that's earnings before interest, taxes, depreciation, and amortization.
Right.
It's a key metric for, measuring a company's profitability.
Okay, so let's unpack this a little bit. What does a record quarter like this really tell us about Delic Logistics' overall performance?
Well, it points to some serious momentum. Delic has been steadily growing over the past year, and this record quarter really underscores that. But it's not just about the numbers. Delic has been making some very strategic moves to position itself as a leading provider of energy services in the Permian Basin.
Yeah, they're not just riding the wave. They're actively shaping their future.
Sure.
Can you tell us more about these strategic moves? I know they've been pretty busy on the acquisition front.
Absolutely. First, they made history by becoming the first master limited partnership, or MLP, to conduct two primary offerings in a single year since 2017.
Wow.
This move significantly increased their financial flexibility, giving them more resources to invest in growth.
That's a bold move. It really shows they're thinking long term. What else have they been doing to secure their position?
Well, they didn't stop there. They also amended and extended their contracts with Delic U.S. Holdings for up to 7 years.
Okay.
This is huge because it locks in predictable revenue streams for the foreseeable future, giving them stability and a solid foundation for growth.
That's clever. It's like they're building a fortress of reliable income.
Yeah.
But what about their expansion into water services? I know that's been a big focus for them.
You're right. They acquired Delic's stake in the link to Webster Pipeline, strengthening their presence in the Permian Basin. But even more significant are their acquisitions of H2O Midstream and Gravity Water Midstream in the Midland Basin. These moves make them a major player in the water services sector, which is increasingly crucial as oil and gas production in the Permian ramps up.
So they're essentially becoming a one-stop shop for all things energy in the Permian Basin.
Right.
That's a powerful position to be in. But with all these big moves, it seems like they must have some pretty ambitious goals for the future.
They do. They're projecting an EBITDA of $480 million to $520 million for 2025.
Okay.
That's a potential 20% increase over 2024, which is a remarkable target.
Wow, that's incredibly ambitious. What's their game plan for achieving that level of growth? Are they just going to keep acquiring companies, or do they have other strategies in play?
They've actually outlined a multi-pronged approach that combines both acquisitions and organic growth. On the acquisition front, they're looking to further increase their economic separation from their sponsor, Delic U.S. Holdings. They've even implemented a $150 million buyback program to boost shareholder value.
Okay, that's a strong signal that they're committed to rewarding their investors and maximizing shareholder returns. But what about their organic growth plans? What specific initiatives are they focusing on?
They're investing heavily in key projects like the expansion of their Libby processing plant and new connections in the Midland and Delaware gathering systems. These projects will increase their processing capacity and allow them to handle even greater volumes of oil and gas. These organic growth projects are really key to their long-term strategy. They're not just relying on acquisitions to drive growth, they're also building out their infrastructure to handle future demand.
That's smart. It's like they're laying the groundwork for sustained success. But all this growth and investment must be costing a pretty penny. How are they managing their finances and making sure they don't overextend themselves?
They're actually being very prudent about their spending. They've emphasized a focus on managing their leverage and coverage ratios. In simpler terms, they're making sure they're not taking on too much debt and that they can comfortably cover their interest payments and other financial obligations.
That's reassuring. No one wants to see a company go on a reckless spending spree and end up in trouble down the road. But it sounds like Delic is striking a good balance between pursuing growth opportunities and maintaining financial discipline.
Exactly. And it's paying off. Their commitment to a balanced approach is one of the reasons they're considered a strong contender in the AMZI index, which tracks the performance of master limited partnerships in the energy sector.
So they're not just growing rapidly, they're doing it in a sustainable way that's attractive to investors. That's impressive. Now let's shift gears a bit and dive into the details of their fourth quarter performance. What were the key drivers behind their record-breaking results?
Their gathering and processing segment played a major role, generating $66 million in adjusted EBITDA. This segment handles the collection and processing of oil and natural gas, and it benefited from higher throughput from their assets in the Permian Basin, as well as contributions from their recent acquisition, H2O Midstream.
It seems like their strategic focus on the Permian Basin is really paying off,
Mm.
but they're not a one-trick pony, are they? What about their other business segments? How did they perform?
You're right. They've got a diversified portfolio. Their wholesale marketing and terminaling segment brought in $21.2 million, though this was slightly lower than the previous year due to some fluctuations in wholesale margins and the impact of intercompany transactions.
It's normal to see some variation in performance across different segments. The key is to have a balanced portfolio that can weather market ups and downs.
Exactly. And their storage and transportation segment had a solid quarter, reporting $17.8 million in adjusted EBITDA. This was driven by higher storage and transportation rates, reflecting the increased demand for their services in the Permian Basin.
It sounds like they're firing on all cylinders. What about their investments in pipeline joint ventures? How did those contribute to their overall performance?
Those joint ventures contributed a healthy $11.3 million, primarily due to their acquisition of a stake in the Wink to Webster pipeline. This pipeline is a key asset in the Permian Basin, and it's generating strong returns for Delic.
Speaking of investments, let's talk about their capital expenditures for the quarter. They spent a considerable amount on their new gas processing plant, didn't they?
They did. Their capital expenditures for the fourth quarter totaled $49.4 million, with a significant portion allocated to the construction of a new gas processing plant. This plant is a key part of their growth strategy, and it will allow them to process even more natural gas from the Permian Basin.
It sounds like they're not letting up on the gas when it comes to investing in the future. And what about their capital expenditure plans for 2025? Are they planning to continue this level of investment?
Absolutely. They've announced a capital guidance of $235 million for 2025. Of this amount, $75 million is earmarked for the expansion of their Libby processing plant, and $160 million is allocated for a mix of growth and maintenance projects. This shows they're committed to both expanding their capacity and maintaining their existing assets to ensure reliable operations.
It's like they're playing offense and defense at the same time, both pushing for growth and protecting their existing business. This brings us to a key question. What does all this mean for investors? Why should someone consider investing in Delic Logistics Partners?
Well, for starters, they're a company experiencing robust growth in a thriving industry. Their strategic focus on the Permian Basin positions them at the heart of U.S. energy production, which is only expected to grow in the coming years.
That's true. The Permian Basin is often called the Saudi Arabia of America for a reason. It's a massive oil and gas field with tremendous potential.
Exactly. And Delic is not just benefiting from this growth, they're actively shaping it through their strategic investments and expansion efforts. They're also demonstrating a strong commitment to delivering value to their investors, as evidenced by their consistent distribution increases and buyback program.
So they're not just growing the company, they're also sharing the wealth with their shareholders. That's a combination that's hard to resist for investors seeking both growth and income.
Absolutely. And they're doing it all while being mindful of their financial health. They're not just chasing growth at any cost, they're being responsible stewards of capital and ensuring they can sustain this growth over the long term.
It sounds like they've got a winning formula. But as you mentioned earlier, the energy landscape is constantly evolving. What are some of the key trends and challenges that Delic Logistics might face in the future?
One of the biggest challenges and opportunities is the transition to cleaner energy sources. The world is moving toward a lower carbon future, and the energy industry is no exception. While Delic is currently focused on traditional oil and gas services, they'll need to adapt and evolve to remain competitive in the long run.
Yeah, that's a great point. They've shown they're not afraid to make bold moves, so it'll be interesting to see how they navigate this energy transition. Will they diversify into renewable energy sources, or will they double down on their expertise in traditional energy?
That's a question only time will answer. But one thing is certain. Delic Logistics is a company with a proven track record of success, a strong management team, and a clear vision for the future. They're well positioned to continue delivering value to their investors regardless of how the energy landscape evolves.
Well said. They're definitely a company to watch.
Right.
Now let's move on to our This Is Not Financial Advice segment, where we have some fun and explore some outrageous but plausible trade ideas. Remember, folks, this is purely hypothetical and for entertainment purposes only.
Don't base your investment decisions on our wild speculations. We're just brainstorming and having a little fun here.
Exactly. So with that disclaimer out of the way, let's get creative. What if Delic Logistics decides to make a bold move and acquire a renewable energy company operating in the Permian Basin?
Whoa, now that's an interesting thought. It would certainly be a departure from their current focus on traditional energy services, but it's not entirely out of the realm of possibility.
I know it sounds crazy, but hear me out. The Permian Basin is a vast and sunny region, perfect for solar energy generation. And with their existing infrastructure and relationships in the area, Delic could potentially leverage their expertise to become a major player in the renewable energy space.
That's true. And it would align with the global shift towards cleaner energy sources, positioning Delic as a forward-thinking and adaptable company.
Exactly. It would be a bold move, but it's one that could pay off big time in the long run. Imagine Delic Logistics becoming a leader in both traditional and renewable energy services in the Permian Basin. That would be a game changer.
It certainly would. Of course, this is all speculation, but it's fun to think about the possibilities.
It is. It reminds us that the energy industry is constantly evolving, and companies that can adapt and innovate will be the ones that thrive in the long run.
Well said.
All right, that's our This Is Not Financial Advice segment for today. Remember, this was all hypothetical and for entertainment purposes only. Always do your own research and consult with a qualified financial advisor before making any investment decisions.
That's right. Investing is serious business, but it's also important to have some fun along the way.
Thanks for joining us on Talk Tickers, and we'll catch you on the next deep dive.
Until then, happy investing.